Good morning, monkey boys and monkey girls. It's time to get back into the long-term analysis for Bitcoin, looking at the monthly and quarterly closes, which are going to heavily influence the long-term. Elsa, stop laughing. This is not funny. This is very serious. We're talking about magic and money right now today. And other than that, I want to let you know that the sale that we have going on is going to end Monday evening at 2 a.m. Eastern time. I guess that would be Tuesday, actually. Oh, well, one of those times. Anyways, so it is the last day. And of course, I do want to let you know that we're going to go over another setup on the Krown Quant automation tools at the end of this video, or near the end of this video, that I do believe will give you a pretty damn good insight as to kind of, how you can use these sort of tools. It actually will showcase the HPDR bands as well, which is, actually my favorite indicator to be using. Anyways, other than that, I want to actually ask a question to the community. I'm considering taking a boxing another boxing match in London, England this time. So I'm curious if there's any Londoners out there. Apparently 10% of this whole community comes from the great state of the United Kingdom. I guess I'm kind of British myself. My dad was born in London, so fair enough. Anyways, we can just jump right in this one, starting off with the biggest and baddest and most important chart on each and every first day of the month, which is the accumulation distribution indicator chart. Why is this one significant? Because it has accurately gotten the macro highs and the macro lows and the shifts in direction throughout Bitcoin's full history, with the slope changes in the red and green zones. However, it is also the slope, while it is within those zones, that does kind of suggest pressure on and pressure off as well. And if you do recall back on March 1st, we did say, hey, there's a little bit of a concerning signal here, as we did get a downside slope, which is indicative of some distribution. Now, this theoretically does make sense with Bitcoin, pretty much trading at prior all-time highs. You're going to see some selling around there. But to see the month of April open up immediately is a good sign that, this month probably does try again higher overall. That doesn't mean that intra-month we can't see a move to the downside. Again, I'm still very much open to, moves to the downside close to $6,000. But my general view here is based off of the Bitcoin production chart, fundamentals chart that we've been looking at, over this past month, and anywhere around $60,000 is a long-term value area. Again, long-term. And if Bitcoin were to get back down around there, it'd probably be an opportunity. Again, these are all probabilities based off of, what we've seen on that chart. But anytime we have seen moves down around that region, the essentially basement price for Bitcoin, those have been, major bottoms actually, before the next sort of momentous move to new all-time highs. Anyways, so there was something rather interesting about this past read here, where we did see this negative slope for, it looks like just 1 month, although it is kind of difficult to judge these things, intra-month here. Realistically, it doesn't get solidified until the last day of the month, but I wanted to see, was there another time in Bitcoin's history where we've seen a downward slope like this, like a pretty aggressive one too, in the overall green zone that was not a major or macro high? And there was an example, actually. There was an example ever so slightly over here in March of 2013. What happened during March of 2013? Well, that was quite literally on... Hey, stop that. That was quite literally on this tick right here, where Bitcoin was already making new all-time highs. It did go into a corrective period after that, to be fair, even though the monthly accumulation distribution indicator continued to move to the upside after that. It did correct down to that cyan moving average, which was the 9 exponential. But again, these were all essentially opportunities before, the second bubble of this double bubble from, 2011 to basically end of 2013. Do we see something similar over here? Perhaps yes. Again, I'm actually a little bit more biased towards Bitcoin more than likely continuing to the upside this month. But, if the halving does produce a little, about 2-3 months where Bitcoin comes down, sets in a higher low on the higher term time frame, and then continues up throughout the rest of the year, that'd be fine as well. The overall analysis would still be in general the same, that Bitcoin probably moving to the upside into the end of this year, as well. Right now that 9 exponential is all the way down at $51,000. Now, to give you an idea of how much it's raised from last month to this month, last month it was 46,250. This month it is basically $51,000. So what is that? About $5,000. That does mean that we can probably extrapolate from that coming into the next month of May, it's going to come up to about 56, and then in what's after? Wait, is it? March, April, May, June. Yes, June probably goes into the low 60s. So the longer that Bitcoin does trade sideways here, if it trades sideways at all, that will naturally get pulled up, and we'll be at 60,000, relatively soon anyways. I would also call out that in this particular region on the accumulation distribution indicator, we've never seen a macro high come in this region. In fact, all of these prior reads, let me put this one back on the relevant area, were essentially basin areas before breakouts, new all-time highs on like major, massive closing bases, especially, this last one right here. You can see Bitcoin closing on new all-time highs, and continuation was had for the next half year or so. And then same thing over here in 2017, just ever so slightly closing on new all-time highs, kind of similar to what we're doing, to what we've seen thus far. And then over the next year, just straight fucking vertical. And then over here, Bitcoin not as close to its all-time high, but again, getting ready for that march to the upside. And all of these, were just generally good areas long-term before the real big move to the upside, as Bitcoin was, usually kind of testing around its prior all-time high. So again, just another thing that does suggest long-term direction still the upside. The question is, how cute do you want to get with potentially getting into a more optimal position as of right now? That's a question that only you can answer. I don't have an opinion on that, or, well, I don't have an opinion for you at least. I only have an opinion for myself, of course, because naturally we all have different preferences as traders and investors. So, my answer might be different than someone else's, is what I'm trying to say. Anyways, moving on from there, I do want to get into where should we take this one? Yeah, let's actually take this right on over here. Let's go to the monthly HPDR bands. Like I said, we'll go over HPDR bands setup a little bit later, but in this case, the monthly did close ever so fucking slightly above the 38.2 level right here. The monthly closure was 71,320, and the 38.2 level to the upside was 70,250. So just about $1,000 above it. Barely registers right here. Essentially, it would suggest that if we are going to see continuation to the upside in April, for like a real breakout momentous move, we need to see closures basically above 73,000 bucks. At that point, very likely we do see a move into the deeper 80s, probably closer to 90, and still cycle high, most likely around the 61.8 level, which is not as severe or as deep as I think a lot of people are looking for, but I am basing that off of, prior highs that we've seen for Bitcoin, which have, for the last couple cycles, not gotten anywhere past that. As you can see right here in 2021, technically Bitcoin did trade higher than that over time, but the thing is that, that was a pretty damn good selling area nonetheless. so it's in terms of like actual price sold, yeah, I'd say that's pretty fucking good. Same thing over here in 2017. This was certainly the high on that test and wick to the upside at 61.8 level. And then prior cycles to that, I would argue that the HPDR bands just did not have enough time to really populate. It needs more data. And as you can see over here, it's getting to like 100%, or it's just, I don't think that's relevant, at least for like the first 20 to 30 bars. After that, the data does start to get more and more reliable, is what I found. But yeah, over here, again, now it still suggests that long term, looking very likely, at least in my opinion, to at least a 50% level, which is actually where we're seeing pretty much every high at least come around. And personally speaking, I do think that 61.8 will probably get tapped. If we start to see moves above the 61.8, which we've never seen actually really in the modern history of Bitcoin, that's where, the road to fucking, I guess, real get richdom is, I don't know, is that a word? But that gets opened. But because, on other time frames when we see that level overtaken, that's really like the big momentous move. And to be fair, look, volatility represented by the HPDR, which comes with all these tools, by the way, it's like an ecosystem essentially, is expanding off of some of the lowest for longest levels we've ever seen ever on this. Comparable really only to what we saw in 2013, 2014 over here. Before this whole move. But in this case, to me, this is a rather important signal alongside directional volatility suggesting upside, which we've actually not really had. Have we had like a perfect setup like this before? I guess the most recent one was actually 2017, where that was, that was more reasonable. In fact, actually the 2013, 2014 low volatility setup was preceded by downside as represented by the HPDRO. So in this case, this is significant as we're seeing, this happen all simultaneously in what seems to be a mostly Bitcoin-led market. Anyways, moving on from there, I do want to get into the quarterly close. Let me get rid of this. There we go. Let's go over here, not to the monthly, but to the quarterly. Let's see. So the quarterly closes on new all-time highs as far as closing prices goes. Even above all prior wick highs as well, playing out the hidden bullish divergence that we outlined many moons ago now. I think this was like a year ago now. With the quarterly RSI getting back into the bullish control zone for the first time basically since 2020, July, I'd say that this run still likely has more to go. Even our other tools like the VMP showing some upside momentum right there, and BBWP, just another look at volatility, is set for expansion off of the lows levels it's seen as well. So again, long term, it's like, how cute do you want to get down? Do you want to get down? Do you want to get down over here? Hands going to be getting down, or shit's going to get hands. I don't need, it's getting fucking crazy, man. I think, personally speaking, I do think that now a move to $50,000 is getting very, 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 very unlikely. I think maybe a little bit below 60 is probably fine, if that even happens at all, but that's starting to become, the basement price from a couple different faces now. Then again, maybe I eat those words. I don't know. It's kind of hard to judge that, which is why I do say, like, it's difficult to get cute here. The long-term direction, however, the trend is your friend if you just let it be. And I think that this one, well, it's probably not worth trying to dance around these too much. Again, 6 month time frame, not relevant for this month, not gonna be relevant until June. June. Same thing. Hidden bullish evidence off those lows. You're already at new all-time highs. It's continuation, man. It's continuation. You just don't need to make it any more complicated than that. In fact, probably even the yearly at this point is, I'll just let that one kind of speak for itself. Cool. All right. So we've got that. Now let's get into the hourly setup. So because today is the last day of the sale, especially with the biggest sale that we'll ever have for this particular tool right here, the Krown Quant automation features, which is getting its own bigger sale at 35% off of all the monthly payments. I do want to showcase this again, just because in my opinion, the best way to market things, just show you. So again, this particular strategy is actually posted in the Discord there. Realistically, I would suggest that you take these strategies as like templates and iterate off of them. They're meant to be a little bit bare bones in that regard, but this one in its base form, I would say pretty damn good. This has been back tested since beginning of 2020. Can we go back further than that? Is a real question. No, for whatever reason. On the index, I don't have more history than that on an hourly. All right, interesting. Anyways, throughout that time, obviously Bitcoin did see a black swan in the Rona dump, and then the 2022 bear market with another black swan with FTX. Maybe you might even consider that. So despite all of that, this one, a long only strategy, has been generally up and to the right, which is what we want. 66.5% strike rate right here over 1,000 trades. If we go back into it right here, we can see that it's actually a pretty simplistic setup. Basically, what we're looking for are longs when the PMARP is between 4 and 29, when the HPDR-V moving average is negative or flat, and when price is closing below the lower band's 1 right here, the 50% level. When that happens, that executes an entry, and then, well, the exit is executed when PMARP is above 78th percentile. So it's a pretty simple setup, honestly. Pretty simple risk management on this one too. But as you can see, in the past, I mean, especially recently, it's been pretty good. Obviously, it's been a mostly up market. Takes its wins, takes its losses, but at the end of the day, the wins outweigh the losses. That's the name of the game, and that's really a good sort of insight into how, at least in my opinion, real trading works. At the end of the day, real trading is, you have to realize you're going to take losses. Again, a 66.5% strike rate means you're going to lose like 3.5 trades out of 10 or 35 out of 100 generally. Okay, not exactly like that, but over time, those are the statistics that you can most likely be reliant on, assuming that you don't overfit these things, which is probably the biggest issue with working with these tools, and why I would say that a tool like this is it's not good for beginners. It's better for at least intermediate or advanced. And just to answer like some questions about this service, there's no real hand holding in terms of like, how do I put in an order? And how does this exchange work? We're not going to talk about that. I'll show you how to set these things up on the exchanges that it connects to, like Bybit and Apex. But the other ones, and especially if you're using the service that we use, which is Alertatron, you can use whatever service that you want. It's just that's what we built the program around. It works with other services, of course, as well. It's just they'll have different sort of coding and whatnot to automate these features. So not only will it automate the backtesting for you, which you can, as you saw over here, kind of use this as like a blank strategy where you can play around and test ideas, and then you can get a very quick output over a long period of time as to what these statistics were for that strategy and whether that's going to be relevant to your interests or not. So yeah, and then from there, if you want to execute it automatically, you can with a third-party service. Like I said, we use Alertatron, which has been mostly fine, but you can use whatever one that you want as well, assuming that it actually works for you. But you might be a little bit more on your own when it comes to like actually connecting, because there's probably gonna be some differences there. I don't know because I haven't used any of the ones, but probably the flow is relatively the same. So yeah, again, this particular service is having its biggest discount ever that we'll ever have for it, which is 35% off on all of the monthly subscription payments. We're not going to do that again in the future. I'm not saying that to rush you into it. I'm saying that for the people who are interested in this and they just don't want to. Well, I mean, if they don't want to pay it later, I guess that would make sense. As always, when it comes down to these tools, like I said, if you're not already at least at an intermediate level, it's not going to be a good fit. It's not going to be a good fit because there's just going to be too much shit to get in before then. But that's all good. You can take your time learning markets. They're not going anywhere. Plenty of free materials and tools on this channel. In fact, I'm going to bring out a whole new free thing that is, it's fucking in depth. But I think it's going to really help the people who need something that's free. And like they really want to put in the time and effort, but they don't have the money to like invest in these in these programs. Hey, that's fine. I'm working on some for you because at this point it's like, why not? Anyways, okay, I think that's enough shilling for today. Like I said, the sale will end Tuesday at 2 a.m. Eastern time, and all of the other products and services are on sale as well, but they're 20% off. So yeah, all right. That's it for today. Yes. What do you want to say? Oh, all right. Come over here, you monkey boy. All right. Fuck you, and I'll see you tomorrow. All right. Take care.